It's tax time! Yay!
So earlier, I got some advice from an H&R Block representative on what he says he thinks that you should be starting to think about now. Take a listen.
So tax research, so this year, tax refunds, if you have the additional child tax credit or if you have the earned income credit, your tax refund could be delayed until late February. The IRS is holding on to tax refunds that include one of those two credits or if they include both of those credits. So if your refund is delayed, you have the option to get a refund advance through H&R Block. So that if you come to an H&R Block tax office and sit with a tax professional, you can get up to $3,000 right then and there if you're approved. It's a no interest, no fee loan through Bank of the Internet.
So why are you finding that the IRS is withholding these payments?
So the IRS is withholding the refund based on one of these two credits being included on the return. And the reason that they're doing this, it's part of the PATH Act. And the PATH Act was introduced because in previous years there's been a lot of fraud around these two credits. People claiming kids that may or may not have been theirs, claiming kids that and saying that they're a certain relationship when they actually aren't. So they had to introduce this PATH Act to hold on to refunds just to ensure the accuracy of the tax return. So tax pros should know, so for 2017, anything for the 2018 tax plan moving forward will not really affect the 2017 returns. So 2018 and moving forward, taxpayers should work with their tax pro to figure out the right amount of withholding. Tax rates have changed quite a bit in this new tax plan. So starting right now, January 18th all the way through December 31st of this year, it's important to have the right amount of withholding. That way you can reconcile your tax return correctly with all the new tax rates that are going to be introduced.
H&R Block sponsored that segment. We'll be right back.